Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report. Well, it's a busy day. We had actually a few busy weeks, and we were expecting that, right? We were warning you that this week is a central banks week, and Bank of Canada surprised us yesterday, and most of the analysts by rising interest rates. Today, just 15 minutes ago, we had the ECB rate decision, which they put the rate on hold. So it's the same as there was no change of interest rate. But it's not the end of the fireworks from ECB, as we are awaiting for the press conference and as a statement from Mario Draghi. So still ECB and Mario Draghi is in the spotlight, and we are waiting for the further development of the situation. So let me show you the calendar maybe first. You can see there was no change in the decision, and still to come we do have ECB monetary policy statement and a press conference in 29 minutes. Apart from that, we will have a small continuation from Canada and a data important for the oil traders. In general, on most of the instruments, we continue the movements that we saw recently, maybe with one exception, which is DAX, because DAX is climbing higher, and for the past 2 months it was under heavy correction. 2-3 months it was under heavy correction, and now DAX is climbing higher. Rest of the instruments, so for example, euro was climbing, euro dollar was going higher, dollar index. So in general, American dollar was heading lower. Canadian dollar was strong, and this interest rate decision yesterday make Canadian dollar stronger, but that's what the trend was. That was the trend, so no surprise there. What is influencing the market? Well, Trump got an agreement with Democrats to extend the debt ceiling, to extend this problem till 15th of December. 2 days before 15th of December, we have a Fed's meeting, so that will be an interesting combination. Apart from that, what we do have is a new Hurricane Irma, which is approaching Florida, is now on Caribbean islands, and is already affecting price of agriculture commodities like oranges, for example, because Florida is a huge producer of oranges, and the price of oranges is skyrocketing. So this hurricane didn't even touch Florida, but it already affects the markets. As for tomorrow, we do have a continuation of central banks. So as you can see, we have a RBA governor speech and a continuation for the Canadian dollar, but is still to come. Apart from that, well, we still have this North Korea story, but no new developments. So it's not the headline. Definitely today it's all about ECB and Mario Draghi. To wrap that up, well, ECB kept the rates unchanged. They also see the QE, quantitative easing program, running until the end of December or beyond if needed. They also see the rates at present level well past end of the QE. So these are the main stories from that decision. And as I said, we are still waiting for the press conference. In this environment, straight after the decision, euro got a bit weaker, but that's not a big movement. It's not a big movement at all. As you can see, the volatility of 28 pips, that's nothing. So there was kind of no surprise there. We are still waiting for the press conference, and definitely that should vastly increase the volatility here. So fundamentals are done. Let's see the charts. Let's see the situation from the technical point of view. And what do we have here is just a continuation of the trend on euro dollar. Actually, I can remove those because it's the past, and I have to draw you on another line, and this one we can remove. We can draw nice uptrend line here, or to be more precise, here. Obviously, as long as we are above this uptrend line, sentiment is positive. We respected this 38.2 Fibonacci level. It was a support for a few days, and now we are attacking 23.6. But currently it's taken as a resistance, and we will see how it will go. But look at that 38.2. That's definitely a level that traders are respecting, and it didn't start here. It started here. So these are two levels that we should be looking for, that we should be looking at. Sentiment is positive, but that's with technical analysis. And always when Mario Draghi is speaking, even if he doesn't say anything new, but always when he's speaking, technical analysis steps on the side, and traders are just trading with their emotions and what they see on the headlines, on the news. They are trading Mario Draghi words, not the technical situation on the market. So that's the reality of such events, and you will be able to see it soon in 13 minutes. British pound is heading significantly higher against American dollar, and that was absolute beautiful correction equality pattern here, and a bounce of 38.2. So 38.2 is, I don't want to say always respected, but is very often respected. And if you're a serious trader, even if you do not believe in Fibonacci's, well, I was kind of like that I didn't believe in Fibonacci, but I started to put that on the charts, and I saw plenty of examples, plenty of evidence that it works, so I started to use that, right? I won't complain, I won't argue with facts. So now I'm using Fibonacci, and really 38.2 Fibonacci is really strong support or resistance, regardless of the type of the asset or of the type of the currency, and here it worked again. The price bounced nicely and is heading towards this resistance, but we don't know if it will be strong because it was respected only here. There were no major switches here, no major reversals, so it's hard to tell if it's gonna work now. Definitely those highs from the beginning of August should work. S&P 500 is having some problems with the upswing so far. We do have this sideways trend, but definitely sentiment is positive. We are above the long-term uptrend line, we are above this horizontal support, we are above this horizontal support, and we are aiming this horizontal resistance here, and possibly all-time highs. New Zealand dollar to American dollar broke this neckline of this head and shoulder formation, but they are not, they don't want to go down. So the thing is, if the price does not want to go down, it will probably go up. I will readjust this trend line here for you to make this a neckline. Because once the price will bounce here and break the horizontal resistance and a neckline, that will be an invest and a shorter formation, and that will be a buy signal once the price will get there, right? Because so far, as you can see, the price is making lower lows and lower highs, but that would be the start of higher high and higher low and higher high. So that would be a reversal of this correction here. So actually a beginning of a new upswing. This is the dollar index, which is making new new lows in September actually. After this false breakout of the uptrend line, the price is heading lower, so that's another proof that false breakouts, they work and they are awesome for trading, and we are on a good way to touch lows from the end of August, which are midterm lows here on the dollar index. It will be also an occasion for the sellers, for the buyers to create a double bottom formation, but so far I wouldn't count on that. Everything looks bearish. We do not have any bullish signs here apart from the hope that we can have some any formation here. Price is heading lower. It doesn't look like it will reverse. And in this environment, we can see gold is heading higher, which is none of the surprise for us, because we were anticipating that for a long time actually. We bounced off this horizontal support very nicely. 2 days ago, the price made higher highs, now a higher low, and now we're on a good way to make another higher high. But for that we still need like $7, but we are close to the daily highs, so it shouldn't be a problem. Here you can see a small drop, but that was just a reaction on fundamental news, nothing serious, to be honest with you. Here is a good occasion, really. American dollar to Mexican peso, having this symmetric triangle formation here locked. That's not tradable, at least for me. I'm a trend follower, so why I say that it's an interesting occasion if it's not tradable, because it's not tradable now. But what I'm waiting here, I'm waiting for a breakout of either the lower line or the upper line. Breakout of the upper line, but we have to keep in mind that there is a close there is a horizontal resistance here, which is often an issue with the symmetric triangles. So only a breakout of this upper line shouldn't trigger a buy signal, but a breakout of this horizontal resistance should. The same thing goes here. Breakout of the lower line should not trigger the signal alone, but breakout of the yellow support should. So I'm, as a trend follower, I'm waiting for the breakout of either the resistance here or a support here. Oil was heading higher. Now we are having a correction, but those Fibonacci's are respected, and this 50% Fibonacci should test of this level should result with an upswing, because that's what the current trend is, that's what the sentiment is. Even as I say, I'm not bullish on oil. In long term, I'm thinking that the price of oil should decline, but in the same time I have to respect what I see. I have to respect what the price is trying to tell me, what the price is trying to show me, and now the price is trying to show me that that there will be an upswing, maybe, which will another wave will start from this horizontal support here on 50% Fibonacci. Euro to Japanese yen broke the 38.2, which was by the way, also respected here, 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 and now the price is back again. As long as we are above 38.2, the sentiment on this instrument is positive, especially if that's what the main trend is. So the main trend is an upswing. Silver is like gold, is in a bit weaker condition, but in general, because gold this year behaves much better than silver. But here we also do have a buy signal, so we're in a up channel up formation here, restricted with those blue lines. The price is having a rectangle now. Rectangle is a trend continuation pattern. Trend is positive, so what we should receive is a trend continuation, which should be a breakout of the upper line of this rectangle and the price heading much higher. American dollar to Japanese yen. Last four hours candles are negative. This blue support is again under the pressure. But for me, this kind of a sideways trend is not tradable. Well, it looks like a rising pressure on a horizontal support, so most probably we'll have a bearish breakout here. But that trading does not look too technical. Does not look technically for me, so for me there is no trading signal here. American dollar to Canadian dollar. This is interesting. So now we had this interest rate decision yesterday, right? Bank of Canada surprised traders by rising interest rates by 25 basis points. That was unexpected. Consensus was that they will keep the rates unchanged, and this caused Canadian dollar to go stronger. You remember our webinar about trading news and macro data from yesterday, and I was telling you about this kind of about strategy for this kind of movements. So when there's an unexpected rate decision, there is usually a strong movement, then there is a correction, and then the movement continues, and that's precisely what's happening here. So, for example, let me show you a smaller time frame, which I'm not using. But you have a downswing. Even if you were late, there is a correction there. You can sell somewhere here and jump in with that movement. I'm not saying you that now, if you like sold here and you're now 50 pips on profit, that you should close this position. No, because usually those movements are very strong and they continue for a longer time, especially that in this case it's also very technical because it started after bouncing from a resistance, right? So it should continue, but movement of the stronger Canadian dollar should continue, but I would be afraid to enter such an instrument like American dollar to Canadian dollar, which is extremely oversold here. I even don't want to put the indicators. I will do that obviously in a second. Just let me measure those waves. I think we still have a lot of area for the. Oh, I'm sorry. Here, one more time. Or here. Okay. We still have 600 pips for the impulse equality, but at the same time I guess that we are extremely oversold here. Maybe not MACD. RSE, for example, below 30, maybe not extreme, but still low levels. Okay, CCI, for example, also looks oversold. RSI, that's stochastic as well. Yes, also below that line. So all indicators are showing us that this instrument is oversold, and they are proposing a buy signal here, which I'm not the fan in this case. I'm just showing you that this instrument is not the best place to go for the stronger Canadian dollar. There are other which look better. Australian dollar to American dollar made new weekly highs, actually made new monthly highs. And we were expecting that at the beginning of the week. We wrote an analysis about the long-term buy signal here. If it's still present, we stated that yes, it is present, and this pair has a nice opportunity to go to climb higher. American dollar to Polish zloty, putting pressure on this important support on 351. After the breakout, the next one is here, 338. Even despite the fact that European Union, European Commission and all that keep, they are telling some bad things about Poland, they are complaining about us, they are telling bad things about our government. Even despite that, Polish zloty is much stronger because we do have now a very strong economy. Poland should have in 2017 4% rise of GDP. Unemployment is on a record low, so that is why Polish zloty is in a very good condition. And here is this DAX, which broke the upper line of the wedge, which wouldn't be a buy signal itself, but as you can see, they broke this resistance on 12,300 points, which was a resistance since the end of July. It was a support earlier, and it stopped the upswing many times, 1, 2, 3, 4, 5 already, and finally the price broke that resistance. For the full buy signal, they need to close this candle, this H4 candle above that support. It would be even better if they close daily candlestick above that support. That would definitely trigger a midterm buy signal. And one of my proposals of where you can enter the market with Canadian dollar is Canadian dollar to Japanese yen, because here on this instrument, you remember that I was waiting for a short position. That's why it is, that's a perfect example why you have to wait for a confirmation, right? Because it looked bearish. But as long as we are above the trend line, we should respect the trend. And I was waiting here for a breakout of the trend to enter with a short position, but it didn't happen. That is why I love price action, because price action tells you that you should wait for the price to show you a direction. And so far here the price is not showing me a direction, definitely not bearish. Currently the price shows me a bullish direction, so it's still making up higher highs and higher lows. We had this upswing caused by this rise of interest rate. We had a correction, which is a normal, and as I said, that's a place where you can enter the market. And now the price is slowly edging higher after this correction. So that creates a good opportunity to go long for a long-term position. Let me show you the calendar, because in 6 minutes the press conference will start. If you're just starting with the market, remember that, well, you should get some choppy movements, high volatility, and it's not the best place to be for beginners. It's a great place to be on a demo account if you're a beginner, but if you're just starting with real money, I would advise you to avoid trading in such conditions, because it's extremely dangerous. You can earn a lot of money on that, but under one condition: if you're on the right side of the market, which is not always so easy. in such movements, and often in such movements the price goes up and then goes down and then goes up again. All the stop loss orders, closed stop loss orders are activated, so even if you were right at the end of the day, during that choppy movements you were taken off the market and your stop loss was activated and you couldn't earn even despite the fact that you were right. So that's the problem with trading during such events, and with all my heart I'm telling you to avoid trading in such conditions. Euro to British pound is the next instrument I have for you, actually the last, because there is no trading signal on American dollar to Swiss franc, but on Euro to British pound what I'm having here is a beautiful uptrend with a recent correction, which is a wedge, which is a trend continuation pattern. We recently bounced off the upper line of the wedge. But if we consider that wedge a wedge, we should wait for a breakout of the upper line here, and the breakout of the upper line of this formation should trigger a buy signal. So far, we are inside. Most definitely this pair in 3.5 minutes will be influenced by a press conference and words from Mario Draghi. And remember that technical analysis steps aside when you have such an important event, but here in case of a bullish breakout, the fundamental analysis, so words from Mario Draghi, will be supported by the technical analysis, so potentially the movement can be stronger than without it. So it's always great if those two types of analysis they come together, because you have strong trading signals there. Before we finish, because that was the last instrument, let me show you euro dollar. So we are still above the first horizontal support, and buyers will try to hold that, but again, don't take technical analysis during such important events too seriously, because you can be surprised that it does not work, and it does not work very often during such an important events. It works 99% of the time, and 1% is that 5-10 minutes during macro data release. So that's the situation on the markets. If you would like more trading setups, you have to follow us on our Twitter account and our website talpari.news. Thanks very much, and again in 2 minutes Mario Draghi starts. Be safe, protect yourself with stop loss orders at all times.